Hello and welcome to the Financial Future Guide. I'm your guy and I'm your guide. My name is Alex and today we're looking at the economic news that has come out of Canada in the last month. We'll be covering everything from the macro economy, the Canadian stock market, and also a few key news stories that have come out over the last few weeks. Without further ado, let's begin. Alright, so we won't touch on this for too long, but having a look at the active cases, we can see that we have over 9,000 new cases in recent days. So we are continuing this uptrend. It's really just all eyes on how quickly they can complete the vaccine rollout so we can begin turning to normal life and normal economic activity. So the increase in lockdowns and business closures obviously has an effect on people who are at work. And during the month of December, Canada shed 63,000 jobs. This is the first time that the market has actually contracted and lost jobs since the March lows. And this obviously affects the unemployment rate. As we can see from the data, the unemployment rate in Canada increased to 8.6% in December, which was up 0.1% from the previous month. With the lockdowns in place and winter minimizing the amount of activities that we can do, I wouldn't be surprised if we continue to see this number rise over the next few months before continuing its previous downward trend. Overall, if we look back to in May when we peaked at 13.7% unemployment, we actually have made quite a lot of progress on regaining jobs, and over the last 4 months have been sitting anywhere between 8.5 and 9% unemployment. Now you may have heard people say that the economy is completely disconnected from the stock market. So to give this a little bit of perspective, I want to zoom out and look at the unemployment rate dating all the way back to the early 90s. Looking at the recent history of the 2008 financial crisis, which did have a devastating effect on the global economy and led the Canadian unemployment rate to a peak of 8.7 in August 2009. So despite many Canadians regaining employment, we are still actually sitting above the absolute peak that Canada saw during the 2008 financial crisis. So with a large amount of people out of jobs and not working, what is the effect on the Canadian stock market? To get a macro understanding of this, we take a look at the S&P and TSX Composite Index, and this is an index that represents roughly 70% of total market capitalization of the Toronto Stock Exchange. There is about 250 companies within this index, which does give us a fairly good idea of how the overall Canadian market is tracking. If we take a look at this graph that shows the last 12 months, we can see despite the big sell-off in March, we have regained almost all of those losses. To be exact, we are actually not even down 1% anymore. Alright, here we go, a 0.05% decrease over the last 12 months, which is fairly significant that we have been able to bounce back in the stock market so quickly despite everything that is going on in the overall economy. And if we have a look over here at the 5-year chart, we can see that we are narrowly approaching the all-time highs. If the market does continue this upwards bull run, we should expect to be seeing all-time highs within the next week or so. Now what we're looking at here is a tweet that came through from Meek Mill just a few days ago, in which he says, "I need everybody that rock with me to learn about stocks and cryptocurrencies ASAP. ASAP. ASAP," with lots of exclamation marks. Now, although I appreciate the love for investing, seeing something like this is somewhat worrying, because what it seems like to me is people think that you can just make money no matter what you do and your decisions don't matter. I'm 100% for people getting into stocks, learning about financial education, and overall making better decisions with their money. However, as we saw before, the market is at all-time highs. The average PE ratios are through the roof, and overall a good chunk of the market is considered overvalued. And nowadays, it is so easy for new investors to get into the market. Take Wealthsimple Trade, for example, which is becoming increasingly more popular in Canada. Retail investors are paying no commissions per trade. They have no account minimum, which makes it incredibly easy for new investors to join the market. To give you an idea of how many new retail investors are in the market, if we take a look at Wealthsimple's assets under administration, we can see they're now sitting at 8.3 billion, up from 4.3 billion just 15 months ago. Not to mention that since the March lows, their assets under administration has grown by 45.614%. That is a huge increase that shows us how many more people are putting their money into their brokerage accounts and investing through Wealthsimple. I couldn't find Wealthsimple's individual user growth, but I could find Robinhood, which is a very similar app available for US investors. We can see that back in 2018, they had 6 million users, and that has climbed in 2020 to over 13 million users. So I'm not here trying to spark fear like what I see many others do in the online investment community, but what I am saying is I do recommend many proceed with caution, especially if they have just recently got into the market. Obviously, as the market becomes overvalued, your upside potential is less and your downside potential is much larger. Anyway, enough about that, let's just be careful. So we did see the Canadian to US dollar exchange recently hit 79 cents, which is the first time it has returned to this since back in 2018. We can see over the last year that the Canadian dollar has had quite the run against the US dollar, and it's been continuing a very steady uptrend. Now, the big story that has come out recently for a Canadian company is Telus International has filed for US IPO. Now, if you are interested in Telus, I actually recently did a full video on the company, and I spoke a little bit about what they do, their business model, and just looked at some valuations. Definitely check it out if that is something you're interested in. And just a side topic, some other news, Financial Future Guide has just hit 1,000 subscribers. Thank you everyone for your ongoing support and love, you are much appreciated. So talk of the Telus International IPO has been going around since about November last year, but we now have confirmation that Telus International did actually file for their US public offering just last Friday. And for those who don't know what Telus International is, they provide a whole bunch of digital and internet solutions to help companies continue to integrate technology and grow their business. They have some pretty big clients including Salesforce and Google Cloud. Now, in Telus's Q3 report, they announced an agreement to acquire Lionbridge AI through Telus International, and Lionbridge is a market-leading global provider of crowd-based training data and annotation platform solutions used in the development of AI algorithms to power machine learning. The sale was about 1.2 million Canadian, and acquiring this company was a huge move for Telus International. Lionbridge AI has over 20 years experience and is one of only 2 globally scaled managed training data and data annotation service providers in the world. Data annotation is the essential process of labeling data to make it usable for AI systems. Lionbridge AI annotates data in text, images, videos, and audio in more than 300 languages and dialects for some of the world's largest technology companies in social media, search, retail, and mobile. Having a look through the Lionbridge AI website, they mention that they help businesses, both large and small, test and improve machine learning models, and they have over 1 million contributors, which are available 24/7, providing access to a huge volume of data across all languages and file types. They have a huge range of services, including chatbot training data, data entry, translation, content moderation, machine learning consulting, and really a whole range of AI services, which is why I think that this is a really good acquisition for Telus International. So you may be thinking, what does this mean for me as a Telus shareholder? What happens when a company such as Telus International spins off from their parent company? A spin-off is when a company takes a portion of its operations and breaks it off into a separate entity. In a spin-off, shares of the new company, in this case Telus International, are distributed tax-free to shareholders of the parent company, or Telus. There are multiple reasons as to why Telus may be spinning off the company. I personally believe it's because Telus International is not aligned directly with what Telus's core businesses, and therefore it may make sense to spin this company off and run it as its own. Historically, spin-offs have been good for investors. On average, both the parent company and subsidiary outperform the market during the 24-month period following a spin-off. I'm a big fan of Telus International and I do like the solutions that they offer, and based on the decisions of some of their clients to go with Telus International to help them achieve some of these solutions, it shows the quality of service that Telus International is offering. Completing acquisitions of large, globally recognized industry leaders, I think Telus International will continue to grow and could potentially become a market leader for these kind of technical solutions that they offer. So although this spin-off and IPO has not yet been confirmed, I will continue to purchase Telus stock over the next few months, and I am happy either way if this does go through or not. OPEC meeting ends with major surprise cut from Saudi Arabia. Saudi Arabia made a late announcement after the meeting that said that they would voluntarily cut an additional 1 million barrels of oil per day in February and March. Now we can see here that in January 2021, oil has also followed the rebound trend that we seem to be seeing, with the price of a barrel hitting over the $50 mark. This news is obviously incredibly good for oil producers such as Suncor, and we did see their stock price rise by 11.17% over the next 3 days following Saudi Arabia's announcement. Moving on, Canadian cannabis company Aurora Cannabis was hit by a cyber security incident on Christmas Day. The company has not shared much information around this attack, but they did mention that patient systems were not compromised and the company's network of operations is unaffected. Elon Musk has become the richest person in the world, surpassing Jeff Bezos. Bitcoin has now hit $40,000, doubling their price in less than a month, but it didn't last long, as in recent days it has pulled back to the $35,500 mark. Honestly, if we take a look at the 5-year chart, this is pretty scary to look at. Again, I'm not going to be the one to say, oh, there's a bubble, jump out, but I, for one, would be taking some of my profit. With everything that was going down with the pandemic, the banks were forced to hold a lot of money for provisions to loan losses, just to ensure that they were able to cover any loans that people were unable to pay. But due to the large amount of government stimulus and support that was provided by the Canadian government, the amount of loans that were defaulted on was significantly less than it could have been. This has led to Canada's 6 largest banks reporting a combined $262 billion in CET1 capital as of October 31st. Now, CET1 is really just precautionary funds that the banks are holding in case we were to fall into a financial crisis. So the banks have a CET1 ratio. They're currently sitting at about 12.3%, but most of the banks have a target ratio of about 11%. So this means that combined, the big 6 banks still have about $27.8 billion extra capital that they have available for spending. So although banks are holding more than they need to, they must wait for Canadian regulators to give them the green light, and then they could do anything from rapidly increasing their dividends, complete acquisitions, or even buy back their shares, all of which are extremely beneficial for us as the shareholders. Alright, thanks for watching. Remember to like, comment, and subscribe to see videos similar to this one.